The Indian rupee, which has snapped its 5-day rally today ahead of the crucial CPI and the IIP numbers, which will be released in next half an hour. The rupee has ended on your screens nearly 0.5% down, 61.21 on the last count. Let's get on board Mr. K. Harihar. He's head global markets for Strand Bank. Also joining us in studios is Vijay Bhamwani, who's author and CEO at BSPL India. Mr. Harihar, hi, good to see you. What's your sense really coming in for the currency? Because we did see a 7-month highs yesterday at 60.60, but that has acted as a resistance.
Absolutely. I think yesterday all of us were very positively surprised when we saw the current account, the trade deficit data. The market was clearly expecting in the 9 to 10 range, and when it came in at 8.1, it was clearly a very positive one, and you saw the rupee going all the way to 60.66. But I think yesterday what changed the sentiment, probably the trigger for that was the stock market, when you saw the stock market selling emerging. And that kind of also triggered a lot of buying from the nationalized banks and the government sector banks. And if you look back at the whole thing in perspective, I think probably the strengthening that you also saw in the last few days was partly led by one big FDI that came in from a pharma company. It also was because of the large supply of FI money that came in into the debt market. That there is a bit of a question mark that's coming in on the ability for that to continue its momentum. And of course, as you mentioned, the geopolitical tensions in Ukraine is causing a little bit of a shadow. Also, people are nervously looking at the developments in China, where the yuan has been taking a bit of a pressure, somewhat some people might say officially engineered. Otherwise, the data that came out in China, the trade deficit which printed at about $23 billion, was a very big surprise, and the fact that the exports had taken a little bit of a tank. So given all of that, there is a bit of buying that's emerged in the dollar-rupee market. No panic yet. The rupee view continues to be positive, with the CAD for the year going to print at probably below 40, more in the $37-38 billion range. We are safe for the time being. But looking into the next year, all this little buying that you're seeing is more a salute to the fact that there is some geopolitical issue, some worries on China, and a bit of a worry that if the gold imports resume in some way or the other, there could be a little bit of pressure on the rupee. But slight nervousness, but no big worries.
Mr. Harihar, also, how are you reading or expecting the IIP and the CPI numbers today, half an hour from now? What are you expecting, and what impact would that give onto the currency?
The IP numbers, we're all expecting it to be bad in the region of about minus 1.5, kind of tallying with all the data that we've seen earlier. So while the PMI data that we saw was sounding positive, PMI is a survey and the IP is the actual number. We're expecting that to be negative, and that's already started to cast its shadow a little bit on the dollar-rupee rates, with the rupee taking a bit of a beating there. As far as the inflation numbers are concerned, I think we are overall positive on the number. CPI expected to trend to the 810 to 820 kind of range. Driven again by vegetable prices, and the core almost kind of confluencing on the overall headline number. WPI we expecting a print below 5, more in the 4.9% range. So again there, for the time being, it gives you a lot of comfort. So in the March policy, nobody's expecting a rate hike. Call money conditions are remaining very soft, but it's a little bit of a mirage effect, because you have a lot of term repos that have come into the market, which has supplied money. We all saw that one day before the advance tax payment due date of 15, you're going to have a 50,000 crore of term repo coming. So that's calmed the sentiments in the market substantially. But into the new year, I think what the markets would like to watch very keenly is, will we continue to see the term repos in action of the magnitude that we've been seeing in the month of March? If not, the market will see a little bit of a liquidity drawdown. Advance tax payments, 50,000 will go out of the market. That's the second one. Thirdly, we've had a bit of a holiday on the central government issues in the last couple of weeks and going forward. But in April, we'll again see a resumption of about 16 to 17,000 crores of central government auctions per week. So that's the kind of supply that the market will have to absorb. And finally, a little bit of weather pattern changing is putting a bit of a question mark, even if it's an early question mark on inflation. We've seen weather patterns disturbed in the form of hailstorms, etc. So there is a bit of a worry that vegetable prices could go up. Wheat crops, some say, are kind of affected in the north. So that is a little bit of a worry, and we have to also see how much of the gas price hike will feed through into inflation. So not very many calling for a rate cut, but definite rate pause, and very watchful view in the next year, both on liquidity conditions and how inflation pans out.
So what you really are saying is that we are not expecting very good numbers when the data releases half an hour from now, and the RBI action in April also could be status quo. So while it is the government action that we will keep an eye on, but the other thing really is elections. That is the key for growth, as more and more reports are pointing out. We have the latest report from CLSA which says that if Modi doesn't come, you will see the rupee at 67 or else between 63 to 65 as well. So would you say much really depends on elections on who really comes in as the PM then?
Not in that kind of a way. Sentiment is a big driver in the marketplace. So if the market gets a stable garment, whatever be the color of the garment, the markets will like it. But having said that, I don't think the dollar rupee moves are being determined by that as much as the fact that the current account deficit is printed will print, let's say, at $37 billion compared to $88 billion that we saw in the last year. So it's a phenomenal kind of improve, and that's fundamentals. That's not sentiment. Similarly, the fiscal deficit being controlled, I think those two have been the primary drivers. Going forward, what will happen is if the headline doesn't look good, obviously sentiment changes, and that can cause a pullback first in the FI market, which is, as we all know, it's roughly about 15 to 20,000 crores have been coming in the last 4 months. So that kind of a number can be a lead kind of sentiment changer on the dollar rupee market. So that's where we would need to be very watchful, not on the exports, not on the imports, because globally we're looking like a happy place with the exception of Ukraine. If US continues to show the kind of growth it's showing, we should continue to see a resumption of the exports, even if there is a little bit of a hit we take if gold relaxations come in a little bit. That is something we can manage. But I think sentiment and the sentiment's impact on the FI most will be the kind of key influences for dollar rupee markets.
Fair point then. It really has to do with the equity run-up and the FI inflows, which really is keeping the economy and the rupee at large on the stable side. But Vijay, how is it looking on the charts? Because 60.60 has really contained the currency appreciation there. How would you want to trade going further?
Manisha, I'm absolutely pleased that the USD INR is going as per expectations that we've been talking about for a few weeks now. I've been maintaining that the scope of appreciation for the rupee has been fairly limited in 60.80 to 60.65 band is what I've been talking about. And I've also stuck my neck out and said I would prefer to be a buyer on the USD INR at 60.5, 60.80 kind of levels. So here you have a technical bounce which I have been talking about, and I still maintain that come the end of March, there is still headroom on the upside for the USD INR, possibly going up to 62, 62 and a quarter also. And at this point in time, a decline to the 61 odd levels would be an invitation to buy for the USD INR bulls, because before the end of March, I do see one more spike upwards, and that would be a trading opportunity, albeit somewhat high risk in nature. Therefore, you might need to calibrate your traded exposure, but I'm sort of confident that there is still about 80 paise to 1 rupee headroom on the upside for the USD INR.